Good day, everyone. Thank you for joining on today's webinar, Looking Beyond the Bear Market for Crypto and Blockchain. My name is Sebastien Couture. I'm general partner at Interop. We're an early stage crypto fund investing in modular interoperable blockchain infrastructure and applications. I'm also the host of a podcast called Epicenter, which some of you may be familiar with, and the Interop, which is a technical podcast focusing on the Interchain and Cosmos ecosystem. I'm very pleased today to be having this webinar to dissect the current state of the crypto market and looking beyond the bear market, and really coming back down to fundamentals and understanding why we're here, why the events of 2022, the impacts of the events of 2022 on the broader ecosystem, and what we can hope to see in the coming cycle. I'm joined by Clément Simon, who will just introduce himself briefly.
Yeah, hi everyone. So my name is Clément Simon. I'm also GP at Interop Ventures. I head of finance and operations, and currently leading the fundraising.
Thanks, Timo. And also joined by a panel of experts that we'll be chatting today about all the topics I discussed earlier. Perhaps before we go into introductions, I just want to contextualize, sort of where we're at in the moment that we're in right now. So many have dubbed 2022 as crypto's .com boom moment, and if we look back some of the events. In May of 2022, Terra Luna, which was an experimental stablecoin project with a market cap of over $18 billion at its peak, collapsed in a pretty spectacular crash, and it brought down with it millions of dollars or billions of dollars in market cap, and also millions of retail investors who trusted its stability. In July, Three Arrows Capital, one of the largest crypto hedge funds, filed for bankruptcy after it failing to meet its margin calls, losing over $3 billion. It created domino effects that were felt throughout the industry, and specifically centralized lending players who could not call back their loans. And perhaps in a final blow this year, in November, the second largest crypto exchange, FTX, became insolvent, while the world discovered that the firm was allegedly and now pretty confidently engaged in fraud. But despite these setbacks, 2022 has been a spectacular year in terms of user growth, developer adoption, and investments. Firstly, I think one of the biggest milestones of this year was that Ethereum successfully performed the merge, which was a significant milestone, allowed it to scale while significantly reducing its energy footprint. This is a project that had been ongoing for several years. Beyond that, global adoption of crypto has grown well beyond pre-pandemic levels, and specifically in middle to low income countries like El Salvador, Argentina, Vietnam, Colombia, and that began adopting crypto in significantly large numbers, and also developers in those regions are now building applications, and builder conferences are now going to those places and attracting local developers. There's also been significant progress on the regulatory front in Europe, while ongoing adoption of MiCA and TFR is underway. And in terms of investments, in the first half of 2022, over $30 billion was invested in crypto companies and protocols, and over $36 billion raised by funds investing in the industry. These are numbers produced by Messari. So while we enter the 14th year since the invention of Bitcoin, we hope to look at today at what are the long-term prospects and opportunities in this space, and looking at so-called crypto winters, how is this one going to fare differently? So with that context, I'd like to introduce our panelists to the stage for brief introductions before we get into the meat of the subjects today. So if you guys could turn your cameras on and enable your microphones, and we'll start doing a round table here, getting everyone to introduce themselves.
Sure.
Let's start with Nikolai.
Yeah, I'm trying to. Yes, we can
start your video
the
because the host has stopped it.
Oh, okay. Let me do that now. Okay, how do I? Not used to doing this on Zoom. I usually use, creator tools like StreamYard, and Zoom is not
Okay,
something.
now
All right,
now
there
I'm
you
the
go.
host. I think we have to be host. Okay, nice to meet you,
Yeah,
everybody. Thanks a lot. Sebastian, I can start maybe with a few seconds introduction. I'm Nicola, principal at Lemnis Cup. We're a crypto native investment firm, solely focused in crypto assets and blockchain. We focus on the early stage, so seed and pre-seed is our bread and butter. It's where you would see us deploying most of the cases. And yeah, glad to be here. Excited to share my 2 cents on this bear market.
Cool. I'll go next. So great to meet you, everyone. My name is Jay, and I'm a co-founder of First Day Labs. My background before this, so I was an engineer at Robinhood for almost 4 years. After spending time over there, initially started to build a decentralized Robinhood, saw that there was actually a very big opportunity to build the infrastructure layer instead. And that's what we're working on right now. So say it's layer 1 that's optimized for exchanges. And if we succeed, then the decentralized exchange experience will be identical to that of the centralized exchange experience. Cool. I'll pass it over to Reda.
Thank you, Jay. I'm Reda, the founder of the Key Foundation. We're a blockchain-powered venture studio that actually relies on 3 pillars. The first is the community. We launched Club, which is an investment club with today 500 members with a global net worth of 5 billion euros. They've invested with us around $4 million in the last 18 months. And we're also launching a venture studio in which Web2 companies launch projects in the Web3 using our infrastructure, which is the key chain, a Cosmos SDK based chain.
Hi, everyone. Thank you for the invitation, Sebastian. I'm Christine Fleuret. I'm president of ADAN, the association that is federating, representing, and raising the voice of the crypto industry in France and in Europe. So today, more than 200 companies that are members of the association.
thanks everyone. Happy to be here with you all, and really excited about this conversation. So, I started the webinar here sort of describing the context for this year, and I know that lots of you have been in the space for several years now. Looking at like this particular bear market, like these are very tumultuous times, like narratives are shifting, regulatory pressure is shifting, investment theses are shifting. Also, infrastructure is evolving and changing. Looking beyond all that, I think I'd like to start by asking you all why you think, and this is maybe a little bit of a facetious question, why you think crypto is still a relevant, game-changing technology long term.
Well, I can start. I was the first one introducing myself. Well, first of all, you named and you mentioned a few enormous differences between what the environment was in 2017 and what's today in terms of capital, in terms of attention, and in terms of what's ready to be deployed. Right. So this is first of all a major difference. I think I want to step back for really a second, and everybody, as I'm sure in the panel and also people that are listening, we made a sort of decision, right? A strong vision for our career, in a sense, right? As investors and as practitioners in the space, to join the space, I would say somebody 10, 6, 7, whatever years ago, right? And we made this choice with a strong conviction in the space. And I believe that bull after bear after bull after bear, basically, none of those fundamentals that we joined the space for has changed. They only improved, right? And this is why I think this conviction that we had is still present. The use cases have been improving. And I would say only the human nature of the speculation around new technology as shown major setbacks for the industry. So that's why I believe we see still strong conviction from investors, still enormous amount of capital deployed, and sitting on the sideline to be deployed in the ecosystem. But cycle after cycle, we still see major setbacks. That's, I think, it's a lesson that we have to learn from.
Yeah, I'd like to double down on this, and it's quite hard for me to say that we still believe. It's actually, I believe, even stronger. My belief is stronger than even before, because the crisis that we see is not a crisis of crypto or blockchains, the crisis of speculation. We were in the mother of all the bubbles until November 2021. A lot of liquidity, a lot of people putting a lot of money in like anything that can be traded. And I think that what happened is a crisis of trust of centralized actors, bad actors that gambled, and we're hoping that everything will continue to go up. But at the end of the day, the fundamentals of crypto, blockchain, and DeFi are actually what protect us from this kind of crisis. And it's actually quite interesting to see that from what happened, if you look at what happened with FTX, it actually exploded in less than 2 weeks. Why? Thanks to blockchain. Individual and independent actors were able to audit, analyze movement on chain to say, hey, this smells actually really bad. And actually a lot of people I know were saved because there was transparency. And what we are seeing is a cleansing, and I think this is a bull case for me.
Yeah, I mean, I definitely agree with the sentiment of both folks. And I mean, yeah, from my side, like the reason that I originally got into crypto and that I originally started building the decentralized Robinhood is because I was there when everything with Robinhood happened last year, and it was just, you felt so bad when you were an insider working at a place like Robinhood when management was just not saying anything about what was happening internally. And I think that after going through an experience like that, like anyone who's been an insider, they just start to value things that are trustless and transparent a lot more. And that was the original inspiration for us to start building that decentralized Robinhood. And I think that everything that has happened this year, like all this centralized kind of blow-ups that have happened, they really just reinforced that thesis that we originally had, that things that are trustless, things that are transparent, they're inherently going to be more valuable for users. And I think in the long term, like that's just not going to be changing. Like in the long term, people are going to be more and more bullish on things that are inherently trustless. So yeah, I mean, that's why I definitely think that even though there's been a lot of noise in the industry, the fundamentals have not changed at all. And that's what I'm going to keep building towards.
Yeah, I think, sorry, go ahead, Tristan.
No, I just wanted to agree with what I had been saying, and just to push on that direction. First, I think we can still be really positive and optimistic because of the growing mass adoption of crypto asset by users. So 8% of the French people has crypto assets now. You have 10% of European citizens. You have around 50% of US citizens. And the reasons why they want to adopt a crypto asset is also evolving based on a better understanding of the technological opportunities behind crypto assets. And that's very important to note that. So it's not only to make profits, but also because the people understand the value behind the self-custody, the possibility to go in a decentralized world that was not allowed to them before, and also and that's something that they can also see in the current news, the possible failures of intermediaries that they can overcome in this new world. So the mass adoption based on this better understanding is a really optimistic way to see how crypto is beginning to be more and more democratized. And regarding the companies, what we can see at this association is that despite the difficulties that they can have in France and in Europe to develop, and difficulties that can be really long to solve. If I take, for example, the bancarization of companies, despite those deadlocks, companies are still building very interesting and more diverse use cases, and still creating jobs and the wealth in France, Europe, and the world. And that's a very that's something that we can observe at the associations. If we have a look, we started with 11 members 3 years ago, and now we are more than 200. So it's a very beautiful dynamics.
Yeah. So if I'm hearing you all correctly, what I'm hearing is that the fundamentals have not really changed, and I think this has been the prevailing narrative, at least in the space. I was watching the congressional hearings where John Ray was speaking to the U.S. Congress, and towards the end of that, whatever 4-hour. I don't even know how to qualify that whole thing, but there was one representative. His name is Jake. I'm going to butcher his last name. Auchincloss. The Americans will correct me on this, but and basically his message was, crypto's been around for 8 years and it has not produced any value compared to, say, things like artificial intelligence and other technologies, other emerging technologies, and that crypto needs to put up or shut up. And I thought, wow, what a disconnect between policymakers that are observing this technology and like a sort of political class, and I think more broadly like a media and political class that see things happening in crypto, but don't necessarily see all of the innovation happening on what I would call, say, the builder side, right? There is tremendous amount of innovation happening on the technological layer, and there really are, I think, several different ecosystems within the crypto ecosystem that I think a lot of people don't really can't really fully capture. So where do you think this comes from, and what are the biggest misconceptions you think people still have? And maybe Faustine, I think you'd be particularly well placed to answer this question. What are the biggest misconceptions people still have when looking at the ecosystem and looking at the technologies and really understanding where the innovations are, where the sort of frivolous, not really very valuable things are, and what are scams, etc. Yeah.
So first, I would say that the institutionals don't really know about the real economy behind crypto assets. Usually they know about Bitcoin. They sometimes know about cryptocurrencies, crypto assets, and that's the step after. But usually they don't realize that there are companies and the real economy behind that are creating jobs and wealth for the state, and that will actually guarantee our digital sovereignty tomorrow. So that's the first thing that we have to make them realize is the economic opportunity behind the development of a new sector, and behind the possibility for this innovation to be available in also the existing economic segments and actually all the industries that can benefit from this revolution. So I think that's the first thing to make them understand, because the institutional speech is more focused on risk than on opportunities. And that's also really frustrating to see that actually the speech does not sometimes really evolve years after year, and that we still have the same preconceived ideas around crypto assets that are circulating, despite evidences and research that can prove the contrary. So those preconceived ideas are always regarding the environmental footprint, the risks in terms of financial criminality, and also lots of questions regarding the relevance and the utility of crypto assets. So sometimes we understand that there is a need for education because those are really those are questions that must be solved. But sometimes we also feel that there is the ambition for the misinformation about crypto assets in order to prevent from that development for several reasons. So actually, it can be quite frustrating when those speech does not change years after years. And there are some good and bad reasons why it does not evolve. So we still have lots of education to do. And I think our focus must be on opportunities regarding the use cases and the companies that we create with this innovation.
Reda, you run a company that is building a user-facing product and application that leverages crypto. Does this resonate with you? This disconnect between real usage and the seeming misunderstanding of the real value in crypto?
Yeah, I think there are many arguments that can explain the reason why there is such a disconnect between regulators, politics, and the usage of the whole technology. I think let's start by what we've been doing. Actually, I got to one main axiom was we need to get as many licenses to operate as if crypto was regulated like securities. That was the first thing. So we went to get all of the licenses. We are an agent of investment service provider. We got our DASP registration in France so that we would be able to operate peacefully. Now, to get back to the reasons, first, it's technology. Regulators, actually, it's hard for them to grasp the concepts of what blockchain is actually disrupting. So basically, the regulators are here to protect the customer and to regulate. So basically, when they started looking at how they would regulate crypto, they took the framework of the old space. But basically, when you build a decentralized exchange, there is no reason to regulate the counterpart risk or custody part, because the blockchain should protect the whole counterpart aspect. There is risk on the technology aspect, security risk, so everything that is related to hacking and everything, but it's not the same kind of regulation, the same kind of protection. So this is for the regulator part. So now the goal of an organization like ADAN that Faustine presides is to explain what blockchain provides in terms of value, what kind of middleman disintermediation blockchain technology offers, and how regulation can actually evolve in this new environment. Yet, the regulator needs to regulate the centralized actors. And I don't understand why an actor such as Celsius or Nexo would escape the traditional kind of regulation that investment service provider need to have. Minimum capital, quarterly audits by tier A, tier 1 firm. These are the kind of things that, because you're actually handling people's money. When you handle people's money, you need to be regulated the same way. And if they trust you, you need to be trustable. So this is for the regulator. And on the other end, you have politics. Obviously, politics is all about communication and marketing because they need to be elected for the next round. So they will surf on whatever narrative is good for them in the future. And I think that we have like 3 kinds of politics. You have the ones that don't know a thing, don't understand, and don't want to understand. So they will just surf on the current narrative that is that brings the most clicks and views and bravos. You have the second ones that actually don't understand, but actually are looking to understand. And you have the ones that understand and see the threat of what blockchain and crypto brings into the societal environment. So basically, crypto, blockchain, decentralization brings freedom. And when society has a taste of freedom, it's hard to take it away. So the one that understands and act in a way as if they don't understand, these are the most dangerous ones because they actually get it. And they know what the society, what they don't want the society to get a taste of. And I think this is our job to bring the awareness to society on the reason why crypto is important, blockchain is important, not on the speculation aspect. And this is what actually brings us so much issue, because media only talk about crypto when it's about Bitcoin aiming for $100,000, but this is not the real value. This is not the real gain. The real gain is freedom.
Yeah, thanks for that. And I think you're right. I mean, I think that crypto is inherently political, and we need to remember that, but we also need to remember that anything that's political will also attract the attention of people that want to sort of deny the freedoms that crypto provides. Jay, I wonder, as someone who's building a platform for businesses to build, how does this resonate with you in terms of like looking for customers and looking for people to come and build on the platform, and what sorts of fundamentals need to be sort of put front and center for those folks who are building on the platform?
Yeah, I mean, the people that are building on Say tend to be more crypto native developers, so they already kind of get it. Like, they're not over here to, like, they understand the more fundamental benefits of building any kind of blockchain-based application. I think that one thing that I have noticed more recently, which has been interesting, is the types of people that we've been chatting with, they've become a lot more mission-driven rather than being kind of profit-driven. And when we originally got started with Say, it was in the middle of the bull market, and the kind of people that wanted to build on Say, there were a lot of opportunities for them to build on other ecosystems as well, that are offering them large grants, that are offering them the ability to like launch and like make a quick buck. And now it seems like people are much more objectively considering like what is the best infrastructure for them to build on. So that has been kind of an interesting transition that I've started seeing recently. The other thing, I mean, just in terms of like misconceptions overall, like I'm based in San Francisco, and even in San Francisco, a lot of people don't really understand the benefits of crypto. And one thing that's interesting is in the kind of media, there's all these portrayals of all these scams that happen with like NFTs, for example. There's also everything that's happened with decentralized blowups. And people tend to take that and like paint the entire crypto industry in that light. And oftentimes I end up having conversations with them about more of the nuances between, for example, why FTX going down isn't reflective of like the inherent, it doesn't really mean anything about the inherent benefits that like any kind of cryptocurrency offers. So I think that educational piece is one thing that still needs to happen. And I mean, even in the Bay Area where there's a lot of very technical people, it seems like that still hasn't necessarily kind of had widespread adoption yet.
That's interesting. And Nicola, as an investor, when chatting with investors, specifically with LPs, what does that look like in terms of a conversation, and what kinds of misconceptions are you still having to distill?
Absolutely. Look, this is very, I mean, there were great inputs from the panel, and this is interesting because it's a conversation that you have to have from a perspective of a money manager and with fiduciary duty, right? I think I was tremendously lucky to come to crypto from an industry where I was extremely familiar with volatility. I used to trade derivatives, and I really realized that the misconception is, I think, primarily derived by, as Faustine mentioned, the risk the risk logics and dynamics and how the institutional investor look at risk versus how they look at upside, and how retail look at risk and how they look at downside. So that's a massive difference. Why? Because the risks that investors and institutional investors look at, it's basically the only thing that they primarily care, while retailers jump on every single use case, and this, the more extreme retailers and the more speculators, I would say, let me use a very strong word, they abuse of some use cases that crypto and the builders have created for the common goods, and bring it to the extreme. At that moment, the institutional investors realize the risk, and that's where they just focus on. I'll give you a very simple example. In 2017, when 20, 30, maybe 50 million were raised in 30 seconds or 1 minute for an ICO, everybody focused on how crazy is that, where the money is gonna go, this is insane, this is like a scam. But very few realized that the capital coordination reached by that event never happened in the human history. It's impossible to send 50 million of any currency in US dollars in one place in 1 second before crypto, before blockchain, like didn't exist. So I think the misconception is really coming from retailers and speculators really abusing of some use cases, and we have seen so many from ICOs, from DeFi, from NFT, any of those that will bring users, they are bringing users, but also bringing speculation. And the investors that are, the institutional investors that obviously are extremely cautious about risk. The way we look at it, it's obviously on a very risk-adjusted perspective, in a sense that there is a really extensive process of due diligence, but starts with a very strong thesis, right? Very strong vision, very strong identification of where the space needs to go, what are the teams that are building in the direction, and what the product that might be needed, and what's the demand for that product. When you basically have this perfect alignment, right? Star alignments with right vision, right team, right product, then taking a sort of a bet from a venture capital point of view, it makes sense, right? And the upside is so gigantic in a sense if things go well, which in a portfolio perspective, it makes sense to run those risks. So this is the conversation we have with LPs. They do understand the nature of returns on venture capital, the nature of the risks. But I would say for us, and I speak like from the risk management that we applied as a team at Lemniscap, the sharp focused on early stage seed and pre-seed mostly throughout the cycles and throughout the years has been the key, because we could have taken so many tangents, right? So many extra risks, so many things that could have brought us really in a different position from where we are right now. So I think the diligence to stick to the plan from an investment point of view is very important.
Yeah, thank you. That's great. The thing that I often try to do when explaining crypto to people, and when explaining people to non-crypto native folks, is like trying to bring it back to the dawn of the internet. And one of the instances that I remember, as like a teenager, like using the internet in like the late 90s and early 2000s was the invention of the blog, right? And like, I think many of you are old enough to remember when blogs started, it was like a very niche thing. It was, like sort of geeks writing about geeky topics like movies or traveling or like specific TV shows, or like, any sort of niche interest. And, there were a lot of people, like, I don't have the exact numbers, but like, I mean, I'd love to find these numbers, but there were lots of people, I mean, some of the people writing blogs, and certainly, hundreds of thousands, perhaps millions of people reading blogs. It was still a niche thing though. Like millions of people were interacting with this new way of communicating, but it still remained a niche thing. And so when I hear people say like crypto doesn't have any real adoption, and I look at things like NFTs in the last bull cycle that brought in like hundreds of millions of people potentially to buy NFTs and to be interested in crypto, I see that as a use case. I think that similarly to a lot of the sentiment perhaps around new forms of communication and like things like blogs and new forms of expression in the early 2000s, where the quote unquote like boomers of the time, right, like the previous generation sort of saw that perhaps as something that didn't have a lot of value or wasn't interesting, but fundamentally changed the way people and companies communicate, to the point where now a blog or like some so like this sort of form of writing has sort of even become a little bit passé now that we use Twitter and we communicate in more short form ways in written format. Similarly to the way that those things were seen as of not having any value, I think there's a similar sentiment towards things like NFTs, things like cryptocurrencies and DeFi and things of that nature. Is that an analogy that resonates with you? And if so, what are the applications, the applications coming that may bring in the next big wave of people? I think looking back to the early days of the web, Facebook certainly was one of those catalysts that brought in hundreds of millions of people onto the internet. YouTube in 2005, 2006, around those times. What are the next waves of applications that in the next cycle will bring in even more folks onto crypto and blockchain? I don't know who wants to take that first.
I can start. Well, definitely. Yeah, definitely. I mean, so many use cases have stayed, right? Like DeFi is still there. We need to find a way to make it more functional and less speculative, obviously. NFT, metaverses, gaming, all of those are still there. I think all of those tooling that we have actually at Lemniscap heavily invested on, they're gonna bring their fruits, right? They're gonna show their value in a sense. And although the centralized application, the creator economy, what we like to call the creator economy, it will really come to fruition. I think reputation is something that has been tackled. Coordination is something that has been tackled and is going to be improving for sure. A social presence, like a ton of what we do socially online right now would be on a decentralized fashion. I'm pretty sure about that, and I believe that. And then I'll post to the next panelist. We are seeing a massive transition between Web 2 to Web 3 of knowledge, of know-how, of A/B testing, of talents, right? And this is massive because these people have done 5-10 years at Google, right? And Facebooks and the Amazons. Those people know how to work. They know how to coordinate themselves in a sense, right? And see what's happening with Aptos and Sui, right? Coming from the Facebook team. So I think now it's really the time where talents have realized that the new decades, the new work is, for protocols, for decentralized entities, for DAOs, for crypto networks in a sense, and that will come, and they are coming big time, and they're bringing all those skill sets basically. So I think, yes, social presence, reputation, coordination, and all that tooling that's been built is going to be used because it's built by great engineers.
I completely agree, and I think it's all about user experience. At the end of the day, I remember in 1997 when I was connected to the internet and started building my first website. User experience was really bad, and like it was awful. I was even coding directly on a server, and actually, what's going to happen is that everything that was built for Web 2 by very structured and knowledgeable people is coming actually to Web 3. And the user experience that we used to have in Web 2 is coming to Web 3. Now, what is the usage? What are we currently disrupting? So Web 1 was consumption. You came onto the World Wide Web and you consume content. Web 2 was about consuming, sharing, and connecting. I think Web 3 is about ownership, and it's not a coincidence that I think the peak of the usage of blockchain and crypto and what I would call the stakeholder capitalism system is coming in a period of recession. Let's not blind ourselves. 2023, it's going to be a year of recession. And what was said by Nicolas is the creative economy, creator economy. A lot of people are actually wanting to, and since COVID, wanting to take their destiny between their hands. And a lot of people quit their jobs. But at the end of the day, they want to make money by doing what they love. And most of the people are actually creating value online. The problem is that most of the value that is being created is actually channeled by intermediaries. I think that's what's going to happen with Web3, tokenization, DAOs, and all of those things. Once the user experience will be as easy as just connecting, doing a Facebook Connect or something like that, is that you will have organizations of decentralized people doing their job, making money out of their job, but at the same time, building equity value in tribes of creators. And I think that this will be one of the biggest source of innovation, is how we can share the equity value that is being built between all the people, all the stakeholders of an ecosystem of value. And I think that 2023, 2024 are going to be the years that we're going to witness that.
Yeah. From my side, I think that so the way that we think about it is that innovation tends to happen in application infrastructure cycles. So originally there's some new infrastructure that comes out. This leads to a lot of new applications, some of which find product market fit. And then for these applications that have product market fit, they suddenly start wanting more specialized infrastructure to enable better performance. One example of this would be the database industry, where you started off with general purpose kind of broad solutions like Oracle, which was created a long time ago. And then Web 1, Web 2, everyone started using Oracle and similar types of databases. And there are some applications that are able to find product market fit. And now there's more specialized infrastructure that is getting created. So for example, now you have solutions like Databricks Warehouse, which is a tool that is custom made for AI and ML. And I think in crypto, it's going to be very similar, right? So you started off with Ethereum, which was extremely general purpose. This led to an explosion of a lot of new types of applications. We've seen all the exchanges, we've seen all the NFTs, we've seen, and at this point, like all the other applications that Nicolas and Rada mentioned as well. And I think that out of these, the ones that have true product market fit right now are exchanges and stablecoins. A lot of the other types of applications, DeFi, a lot of the other types of applications that have come out entirely, I think their product market fit is a little bit more questionable. But definitely for exchanges and stablecoins, there is product market fit. So I think what's going to be happening over the next few years is, first of all, for these things that already have product market fit, there's going to start being more specialized infrastructure getting created for them. I mean, what we're doing at Say is exactly building this infrastructure for these exchanges where stablecoins are going to get traded for, among other things. So, I mean, I think that's like one wave of innovation that's going to happen. And then the other wave is going to be more experimentation around the actual application layer, which I think the other panelists have gone into. So I think there's going to be a combination of both of those things happening in the next couple of years.
I think that in the current news, there is one huge topic that is already very important, but that will become even more important for users is regulation, because regulation will be a tool for mass adoption and to help the general public to go to the actors that will guarantee them investor protection and other protections such as against financial crime, against market abuse. And till now, there were very diverse approaches in terms of regulating crypto assets. And in France and in Europe, we were really in advance about regulating crypto asset markets. But with what happened, I do hope that in the current years we will go to regulatory harmonization on the international stage, because since we have this regulatory fragmentation, meaning that in Europe we'll have a framework implemented in the 2 next years, whereas in other jurisdictions you have nothing, or it will be implemented later. You still have loopholes that where the users can be trapped and can lose everything, and that would be very detrimental, and that is today quite detrimental to the world crypto, which is suffering for a confidence and reputation crisis because of some actors which are in minority, but some actors which will make a lot of damage for the world ecosystem. So I think that in the coming years, users will be more and more cautious about which type of intermediaries they will subscribe their services to, and they will maybe have a better look at the regulation that will be around and the regulatory environment in which they will evolve. That's something that unfortunately will be promoted because of those recent bad news, but that will at the end raise the credibility and seriousness of the world ecosystem. But that will be achievable only if we have this regulatory harmonization and the supervision that will guarantee that we have a level playing field in Europe and in the world. And it's only because we will have both regulation, supervision, and promotion of the credible and serious actors that we will be able to offer to the public the comfortable environment to promote mass adoption.
Excellent. Before we close up the panel here, we are going to do a Q&A. And so if anybody in the audience has any questions, please use the Q&A module here in Zoom, where you can ask your question. And yeah, we can let you come on stage and ask your question to the panelists. So I think my last question, we've covered a lot, is a lot of topics here. We could cover so many more topics, but I think one of the things that I really wanted to find out was we've been through several cycles. Personally, this is my third bear market. I've seen the cycles. I've seen this this lockstep infrastructure application building phase that you mentioned, Jay, and I think is very accurate in terms of how technology evolves. Certainly, this was the case in the case of the internet and the web, and we also see this in crypto. We've seen regulation also come and become a part of the discussion and the narrative and the broader crypto landscape. How is this bear market that we're entering into, how is it different from previous bear markets, from the 2016 2017 bear market, from if you're OG enough to remember the 2014 bear market? How is this bear market different? And what are your hopes for as we come out the other side into this next cycle?
I can start because just for the chronological order. Well, I was around marginally on the very first one. I realized that nobody cared. I wanted to build up an option exchange for Bitcoin, and really nobody cared at the time. It was January 2014. I can clearly say between this one and the one of 2018 2019. Well, we had very large investment firm doing 250K on a deal if the deal was done. And now we have firms, we have projects raising 50 million and it's oversubscribed and it's on a bear market, right? And it's hard to get in. So this is a enormous difference for sure. Like the capital available and I would say the security that if you are building something that the market needs, you're gonna get funded. It's not like it's not really like 2018, 2019 that a lot of people were wondering if that was a silver lining. Now there is for sure. It's just a cycle. I think the major difference is that this time we know it's a cycle, has been playing before, and there's no doubt about that. So there is the security of it's gonna end at some point. Absolutely, the capital, and I think over and over two things: how the use cases are multiplying themselves. Like we hope that DeFi would become a thing. It did become a thing. We hope that NFT would become a thing. It did become a thing. We hope that DAO would become a thing. It did become a thing. Then, of course, there's the cycle of those, but those are actually playing out. Those theses are playing out. And the last thing for my closing remark is that we are seeing over and over and over, which is a good news, I think, that the reasons why we come to bear markets is because of leverage. The leverage that projects were on ETH on 2017, because that was their treasury. The leverage of Luna, the leverage of all the centralized entity that blown up. So it's over and over a matter of leverage, and I think this is the this is the major difference and the major catalyst, like the insurance that the space is going forward.
I completely agree, Nicola. Like I'm an anti-leverage. I hate leverage because I like to sleep at night. But I think that still people will continue to do leverage, unfortunately, because people are gamblers. I think that's what's going to change in this bear market is that I think we've moved from the protocol narrative to the application value narrative. And this is where most of the value is going to be created. And the application value narrative is possible if and only if the user experience get to a point where we can get to the mass markets and not just the 5% community of geeks that sometimes don't care about money, but just are playing with tech. And I think that when we get to the point where user experience provides this mass market adoption, we'll get more of real life value businesses providing value into crypto, and the value will not be about leverage, but about future gains provided by technology in real life businesses. And I think that this will be the new narrative. I'm not sure if it's going to arrive in 2023 or 2024, but I'm quite sure that this is going to be the next big thing.
Yeah, I think one of the bigger differences right now versus previous cycles is that there still seems to be a healthy amount of both optimism and also people that are like actively building and not being discouraged. I mean, the cynic in me also kind of believes that that's because we haven't actually gotten to the worst part of the bear market yet. Like right now, it's still we're still in the early stages of it, which is why there's still a lot of teams that are relatively well funded. There's a lot of teams that haven't given up on what they're trying to build. But yeah, I mean, it just feels like the biggest difference is that after going through what we've gone through in the past few years, like people generally have the belief that crypto is here for the longer term. Whereas I think in previous cycles, it was a lot more existential. So, I mean, coming into this cycle, it does seem like there are a lot more builders. There's a lot more money on the table as well. And assuming things don't become significantly worse, like there's a lot more optimism as well.
If I may finish in a few words, I think what's very different is the institutional landscape. So the people that are in the markets, actually more and more institutionals entered the market. That was not the case a few years before, because also the regulatory environment evolved and is becoming more and more clear and more complete. And I think finally you can see companies even if the crypto industry is based on a large population of small projects, you have now companies that can testify that they could survive in the past few years and that they are still there, even if they suffer from some different cycles. So that's also something to make the vision quite positive. So that was in few words what I could add to what has been said and that I agree with.
Another really last point, because I think your attendees and the audience will be interested. It's something we discussed quite a bit internally with the LPs. One thing that has changed and will change, in my view, is correlation for the general crypto assets compared to the other asset classes. Why? Because if we want mass adoptions and if we want institutional investors, coming into the space, we can't have the cake and eat it too. So crypto, Bitcoin, in general, the large assets will be considered for a long time, realistically speaking, a risk asset, right? And will behave according to that liquidity, supply and demand, I would say, which we have seen in the market, and it's quite increasing. What is interesting though, and we have Ramsan data, and I'm talking because of that. Investing in early stage and the job of a venture capitalist, in a sense, decreased dramatically this correlation to the assets in general. So this is very interesting. While you see correlation of the major crypto assets increasing with other asset classes, you see that the venture capital industries, which Sebastian and I are, obviously, it's quite uncorrelated because of the uncertainty on when those companies come to market. So that's quite interesting for the LPs.
Yeah, certainly. Thank you, everyone, for your very thoughtful answers on all of these topics. I want to open up the questions now. If anybody has any questions, please raise your hand. You'll find the raise hand button down at the bottom of your screen, and I'll bring you up on stage so you can ask your question. If you prefer not to ask questions live on the live stream, you can also add them in the Q&A, and I'll ask the question for you. So yeah, if anybody has any questions, now's the time. We've got 4 expert panelists here ready for you. So Clément, come on, why don't you come on stage and ask the question instead of in the chat.
Maybe I can give a first answer about that.
Yeah.
Of
So
course,
the question. So just the question is, maybe he can't turn on his camera right now, but the question is, how has the regulatory conversation changed? And I think specifically that means that in light of recent events and the events of this year, are regulators still thinking sanely about crypto, or are they leveraging recent events to gain a stronger foothold, I guess presumably to restrict access to crypto, to restrict application development and things of that nature? Sorry, go ahead, Faustine.
So I think that it's not an easy question, because we can recognize that on some points regulators and EU institutions did think sanely. And if I'm coming back to MiCA debates, we can be really happy of the at the end with how DeFi, NFTs, and the environmental questions were tackled, because it was a very pragmatic approach that was adopted. So both DeFi and NFTs were finally not in the scope of MiCA, based on the fact that EU institutions understood that it was not the right vehicle and that it was too early to regulate those innovations. So that was a really positive.
What a relief.
Yeah. And regarding the environmental questions, I think you remember that there were some bad and very bad ideas on how could be addressed the proof of work question and what we call the ban of proof of work. And at the end, the EU institutions had a very pragmatic approach, asking, and that's a very logical and very normal, that they ask issuers and service providers about information about the environmental footprint of the protocols that they use to issue or to provide their services. So something that actually quite aligned with the general strategy regarding the fight against the climate change. So we can, and it was 2022. So that's why I wanted to point those quite pragmatic approaches that we had. So it was quite sane, as you say. But at the same time, of course, they observed what happened with the Terra Luna case, the FTA case more recently. Regarding the Terra Luna case, it happened at a time where EU debates were still open on MiCA. So it actually make what was quite bad even worse on the stablecoin regime. That has always been a very sensitive topic. And so at the end, we have something very strict regarding stablecoins. And I think it's obvious that behind those debates, there was really a wish to prevent from the emergence of Euro stablecoins and the wish to push for the ECB project of digital euro. So on this topic, it was quite hard at the beginning, and it became even harder to discuss based on what happened on Terra Luna. Regarding FTX, it's a bit different because at the EU level, so the discussions on MiCA are actually finished. So we have the it's currently being adopted. So MiCA should not be reopened because of the FTX failure. But what we see, and that's I think very negative, is that we have some national initiatives, and I'm more aware of what's being discussed in France, but national initiatives that to reinforce regulation that could strengthen the regulatory fragmentation, and that could actually be very counterproductive regarding the competitiveness of our companies. But also because this is not the right solution if we want to answer what happened on what happened to FTX. So it's not an easy question, because sometimes you can be really optimistic regarding how regulators tackle regulatory issues on the crypto asset, but at the same time, depending on the topic, it can be to the contrary, really difficult to achieve pragmatic solutions.
Thank you. We have two folks asking questions here. I'm going to start with Amar. Amar, I'm giving you the chance to speak. Go ahead. Just have to unmute yourself.
Okay, great, thanks. Yeah, can you hear me?
Yes.
Okay, great. Yeah, so I wanted to expand on the point about how we need to move from protocol narrative to application use case narratives, and I think to maybe follow on something that Jay said. So two of the things where we have found some product market fit are exchanges and stable coins. So I think the lady talked about stable coins a little bit right now. Would love to get the panel's thoughts on exchanges. So obviously with centralized exchanges, we've had erosion of trust, and I agree that a lot of it is because of some bad actors, and it doesn't necessarily mean anything bad about the technology. But let's just say there's three potential scenarios how this pans out, and I'd be interested to see where the panel clustered. So one is that in the interim, you kind of have these hybrid solutions where you have custodians coming up with these exchange networks where you don't actually have too many assets sitting on exchange and hot wallets at any time, and you kind of have these synthetic ledgers. Or secondly, you have more DeFi where you're relying on the code and not on the centralized parties. And thirdly, a scenario where just real money from the institutions refuses to really play until a lot of these broker dealers are actually regulated. So how do you guys see that panning out?
I think in the near term, like there's already more of a shift towards greater and greater amounts of trading activity and trading volume happening on DeFi. I think realistically, centralized exchanges are still going to be the de facto way the trading is going to happen in the near term, at least until the user experience becomes a lot better with doing anything in a decentralized fashion. Like right now, the decentralized trading experience is just really, really difficult compared to the centralized experience. So I do think like near term, it's going to be centralized players that are having a majority of the volume. Then longer term, I do think the merits of doing things in a decentralized fashion outweigh the downsides of, are like substantially greater than like the benefits of doing things in a centralized fashion. So I think long term, once the rails have been set up, then there'll be more DeFi activity happening there. And I mean, that's exactly why we're building Say to help make that user experience a lot better. Around the institutional piece, I think institutions tend to come after retail is already there. So they're probably going to be the last movers to be entering this space. And even right now, I mean, there have been a lot more institutional players that have been entering and starting to do things on chain, but a majority of institutions still are not. So I think that'll be more of a long-term thing that'll probably happen. I would say a few years down the line where like a lot more institutions are participating.
Thanks, Jay. There is one more question. Reda, I think you are you still good to stay for a few minutes, or do you have to sign off?
Yeah, I can stay for a few minutes.
Okay, so we'll do one more question here. I think there's one more question, and then we'll wrap it up. Nathaniel, you had a question.
Yes, can you hear me, guys?
Yes. Hi.
Perfect. Well, thanks a lot for your time. I came a bit late, so I'm sorry if the topic was already addressed. But I had a question regarding the next crypto winter we're seeing. I'm thinking this would be pretty different from all the ones we knew before. First, because of the critical size that the crypto got, and as well as the modern on the community as well as on the adoption of the technology, but also because of the entering of new actors, especially big Web2 actors that want to get involved in Web3, want to use it in a way or another, whether it's Web 2.5 or pure Web3. And I'm wondering if what's your vision on this crypto winter we're going to see, but with new actors such as these tech giants or big brands in Web3, Web2?
I think that we will see the same way we saw companies like IBM, Microsoft during Web2 trying to do stuff like startup does. I think we'll see the same thing with those big companies trying to get into Web3. The problem it's about DNA. Building what people are waiting for in the decentralized environment. Actually, it needs some kind of philosophy. And like the same thing I said in a previous conference I went to, there was a company talking about fundraising and hard to fundraise in token and doing mixed fundraise with equity in token. I'm completely against that. Like usually I see, when I see a company raising with tokens and having equity, I see misalignments of interest and I see danger in the future. At the end of the day, I think that we're going to see big companies trying to do things in Web3, but it's going to be powered by 100% Web3 organizations. And what I said about fundraising was just an example, but I think it's about philosophy of Web3 and how things are going to be executed. But at the end of the day, builders are still here. And like Nicolas said, we still see great teams being funded, and we're going to see great projects and great innovations coming together in 2023, 2024 to bring the next potentially bull market maybe in 2025.
Okay, thanks a lot. But so you're saying that you don't see any Web2 actors as a catalyst or allowing maybe to go reach the next billion users, because as of today they have the best UX, the best UI. So far, they are the most advanced with the most amount of users. So you don't think that they can be eventually a help within the development of Web3?
I think they help for adoption, but I don't think they will be the vessels of the future.
Okay, so you see them as simple enablers or just a highway to go faster, but in the end, it's only Web3 builders that get to. Okay, thanks.
When I see, for example, let's say, okay, let's talk about NFTs. Let's talk about bullshit NFTs. Let's talk about the rock that NFT that people bought for $500,000. When Instagram announced that now you can put your NFTs on Instagram from like Polygon and Ethereum, people don't care anymore about NFTs, about like PFPs. It's bullshit. The real value of NFTs is utility NFT. And at the end of the day, I'm not displaying my utility NFT on Instagram. But at the end of the day, what's interesting is that the fact that they were interested into bringing NFTs on Instagram was a catalyst for people getting more interest into Web3 and the whole technology, underlying technology. So it's going to bring coverage, but I think they will always be late. But at the end of the day, it's people like Jay, Nicolas, and all the builders in the Web3 that's going to build the future of this ecosystem.
Okay, thanks a lot. That's very clear.
Did anybody else on the panel want to react to that question? Okay, I think that's all we have for questions. Thank you everybody for, well, thanks to everybody for tuning in, for coming into the webinar and participating and also asking questions. And thank you so much to all of you panelists. Sorry, I'm going to sneeze here. Jay, Faustine, Reda, and Nicolas, thanks so much for taking part in this conversation. This is, the first time, that here on the Interop, we've done this kind of round table. It was an interesting experiment for us to test this format with an audience that can ask questions and sort of interact. So it was great. Thank you so much, and thanks for your thoughtful answers and for advancing the conversation and sort of opening everyone's mind as to what are the fundamentals, and sort of reminding everyone about what are the true fundamentals and why we're here and why we're still building. But also what's to look forward to over the next couple of years as crypto becomes more, say, serious in terms of having regulatory framework, having more robust infrastructure, having better user experience also, which is very interesting. Each of these topics we could do a dedicated panel on, I think. So certainly we'll try to do that again soon, perhaps next year, probably actually pretty soon next year, we'll do another panel. And I hope you guys have a great rest of your day. Thanks, everybody.
Awesome. Thank you.
Thank you very much.
Thanks for having me. Bye-bye.
Cheers. Bye-bye.
Thanks for
Bye-bye.